YouTube, Dooney FX here. I'm back. I know it's been a while, but I've been busy doing other businesses and taking care of people close to me. But I'm back and I'm here for you guys. And before we start anything, I want you guys to go on this amazing, most trustworthy, most transparent woman I ever met. I want you guys to follow her business page, and it's called Cupcakes by Steph. She knows how to make the best cupcakes, and she's very detailed, and she takes her time with things, and it is very, very satisfying when you eat that cupcake. Like, oh my God, guys, let me tell you, she is worth it, and if you support me, you support her. So please follow her page ASAP. You know, and yeah, let's get back to the video. Alright, so remember last video when I was talking about uptrends and downtrends? Now it's time to get into more detail about them. Remember, in an uptrend, price makes higher highs and higher lows. In a downtrend, price makes lower highs and lower lows. I hope you guys took notes of that because, I did say that in the last video too. I really hope you guys took notes. But now we're going to get into support and resistance zones and trend lines. Like, these right here is what you need to verify the trend or identify the trend. Always remember that support and resistance zones are tools to use to identify the trend. But before we get into the technical side, and yes, this is called technical analysis. Support and resistance trend lines, that's called technical analysis. But before we get into technical analysis, like in depth, you guys need to understand what fundamental analysis is and sentimental analysis. So I should have told you guys in the last video that there's 3 different types of analysis used in Forex. You have fundamental, you have technical, and sentimental. Technical is what you guys was learning in the last video and what you're going to learn in this video. And fundamentals is basically what you guys really need to do technicals or to make your technical analysis valid. Fundamentals is like the most important analysis out of all analysis. Sentimental analysis is just like fundamentals, but fundamentals is like kind of like a risk on or a risk off, meaning greed and fear. Greed and fear in the market is basically sentimental analysis. But so what we have right here is called a currency pair. GBP is a currency. USD is a currency. GBP is the currency for the UK. Great British Pound. USD is the currency for the dollar. For the US. US dollar. United States dollar. US dollar. Same thing. But the currency in the front is called the base currency. And the currency in the back is called the quote currency. You as a trader, you want to see if the base currency has more value or less value than a quote currency. If the base currency has more value than the quote currency, guess what? You're in an uptrend. If the base currency has less value than the quote currency, guess what? You're in a downtrend. So look, right now you see an uptrend, right? That means Great British Pound, the currency for the UK, has more value than the dollar. See? You as a trader, you're placing your bets on the base currency. Yeah. That's exactly what you're doing. You want to see if the base currency has more value than the quote currency. So, let's talk about fundamental analysis because, you know, that's one of my favorites. Fundamental analysis is used in the market quite often. So, for instance, I think when the coronavirus started, the market fell and dropped. Like all the currency pairs had a huge drop. Like when I tell you selling pressure was going down, like it was like price was just falling like atomic bomb, like shoo, like it was crazy, and all you had to do was sell the market. Mind you, any trader would have made money during the coronavirus. It was that simple. All you need to do was sell the market, and you made money. Everyone sold the market because the coronavirus hit. Investors around the world, they thought that they basically they took money out of their positions, out of their long-term positions, and when you take money out, price has two options. Okay, either buys if it either goes up or goes down. When I mean take money out, investors were buying the market from like January or when the year started, they were buying currency pairs from the lows and they were holding it for like months. And although you will see a downtrend on a higher time frame, like this for example, these are time frames. See, weekly, 4 hour, daily, monthly. But yeah, on a higher time frame, like monthly for instance, like investors with big capital, they bought the market from the lows. These investors have huge amount of capital. You wouldn't even believe. And I met one before, and we spoke. And when I tell you, this man's on a different level. Wow, I met him at what is it called? Panara. It's like Panara bread. I don't know, something like that. But this man was explaining to me. He was giving me tips and stuff. He told me I'm on the right track. That made me feel good. But he said that investors took their money out of the buys from long ago, from higher time frames, and guess what? Greed came into the market. So retail traders like me and you guys watching this, they sold the market. They sold it because the people with the big money, they stopped buying the market. So you don't see the buys anymore. All you see is just sells. Sellers came in. Even they switched their buys. Like from buys, they turned their buys into sells. Even they started to sell the market. They was like, you know what? Let's sell the market because coronavirus just hit every economy, and why would I want to invest in this economy right now? So that's what basically happened. Those big money people sold the market, banks sold the market, investors, people around the world, traders like us, we all sold the market. So we saw the biggest drop ever, and everyone could have made money. I want to show you guys too the drop. It's okay. Let's show you guys the drop. Here you go. This is the drop right here. I highlighted it. Yes. See? Huge drop. Can't you believe that? Look how big that drop is. Like, wow. Huge drop. Because, like I said, long term investors, like, they were buying from right here. See, look how long it is. And this is a measuring tool you use on tradingview.com. You can see like how long you can hold a trade for. 133 days they were holding this trade for. 133 days, bro. Isn't that crazy? That's the position like all of us are gonna be in. And after you guys, after we grow our community together, and after you guys support me and everything, we all gonna be big traders. Trust me. I'm telling you, we're gonna live our life while our money is growing for us. Basically, making passive income. Isn't that cool? Trading is like trading is that lifestyle that is worth it. Like, wow, bro. But yes, everybody just sold the market here. Investors sold the market. Banks, institutions, retail traders like us. But let's get back to this. All right, so that's what that was basically. That was basically fundamental analysis. That was also fundamentals also. And what fundamentals is basically news events around the world that affect the market. So, for instance, Donald Trump will say, "Wow, the U.S. dollar is doing great than ever." Now, investors around the world are gonna buy the dollar. So imagine the dollar being the base currency. For instance, let's go on USD CAD. Do you see this right here? Imagine a dollar being the base currency. So Canadian dollar, the Canada's currency said that we have no money right now, we're suffering, and then out of nowhere, the dollar, Donald Trump, or any other president, they say that the dollar is doing great than ever. We have a lot of money. We're making progress. America's gonna be great again. Some shit like that. And look, like, boom, our rally just like it just explodes. And this is just an example. I know why this was the coronavirus also, and I'll get in more detail about that. It's the dollar being a safe haven currency. Safe haven meaning basically when people get scared that something big is happening, they will send money to the U.S. dollar, and this is what happened. They sent money during the coronavirus. See, so look, see how let's mark this up. This went up like this, and when you go on a different, remind you, U.S. dollar is the base currency, right? And guess what? Look at GBP USD. You see the same time. Look at that. GBP USD is the base currency. So the same day the US dollar gained strength, the pound depreciated in value. Like, it did not have any strength. See how it's the base currency? See? British crown, US dollar. The pound did not have more value than the dollar. The dollar had all the value. Look at it. Everybody bought the dollar because they know, as traders, that the US dollar is a safe haven currency. See? Because if the pound was a safe haven currency, then you would have seen buys. But The pound is not a safe haven currency. But yeah, let's get back to the technicals. I gave you guys a lot of information about fundamentals analysis, and I really hope you guys will like replay the video and hear what I'm saying, because people pay a lot of money for this, and I'm giving to you guys for free on YouTube. So please pay attention. I really hope that you guys are paying attention or taking notes, because this is valuable information. All right. So let's get back to the technical side. This is the part where, there's a lot of strategies to it. Technical analysis, there's a lot of strategies, and there's working strategies, and there's horrible strategies, and then there's strategies that are amazing. So, right now, this is an uptrend, right? We know it's an uptrend because GBP has what? More value than the dollar. In an uptrend, make sure you write this down. In an uptrend, resistance will become support. What is support and resistance? So I want you guys to stand up and jump on the floor. When you jumped on the floor just now, did you go up? Exactly. That's what you call support. So this is you when you stood up, you jumped on the floor. Boom. You jumped on the floor. Boom. You just hit a ceiling. Like your ceiling or your roof, that is your resistance. So the gravity, once you hit your head on the roof, it takes you back down. That's what you call resistance. So your ceiling is resistance, and your floor is your support. It's that simple. And guess what? What happens when you break your ceiling? You keep going higher, right? So when you break your ceiling becomes your support. So when you break resistance, resistance will now become support. It's that simple. So when resistance becomes support, you are now in an uptrend. Always remember, when resistance becomes support, you are in an uptrend. When resistance becomes support, you are in an uptrend. When your ceiling becomes your floor, you are now in an uptrend. Support, you're jumping on your floor and you're going up. When you hit the roof, you're going down. The roof is your resistance. Your head hit the roof and now you're going down. That's your resistance level. It's so simple. And like I said, this information right here are is really, people are really getting charged thousands of dollars for this, and I'm the YouTuber that's giving out everything for free. I was one of those people that bought these courses. Oh my god, when I tell you guys I bought these courses. I bought the course. I bought the courses, like, what was I thinking? Okay. But yeah. So in uptrend, resistance becomes support. Guess what? What happens in a downtrend? Let's do it right now. Boom. Selling pressure. It breaks the level of support. So when support is broken, it now becomes resistance. Isn't that cool? So when support becomes resistance, you are now in a downtrend. When support becomes resistance, you are now in a downtrend. Alright? When support becomes resistance, you are now in a downtrend. So when your floor is broken, you're gonna retest, or you're gonna come back up and try to touch your floor, the bottom of the floor, and that bottom of the floor is now becoming your resistance. or is now becoming the ceiling. See, it's like basically you're going to hell and you're trying to come back up for another chance, but God doesn't want to let you come back up, and boom. I don't know, that was a bad analogy. Oh my god. But I'm sorry. But yeah. That's what it basically is. See? And it keeps going. See? And guess what, guys? This is what I said on the last YouTube video. When a higher low is broken, we're now in a downtrend. So a higher low, this is a higher low because it's easy. Look, a higher low, higher low. This low right here is higher than this low. This low right here is higher than this low. So this is a higher low. In the last video, I said when the higher low is broken, guess what? We're now in a downtrend. But this is why the support and resistance zones are there to confirm the downtrend. So when support is broken, it will now become resistance. When a higher low is broken, it will now become a lower high. Because mind you, this is a lower high, this is a lower high. See? This high is lower than this high. That's what you call a lower high. So, write that down. When the higher low is broken, it will now become a lower high. So, when price becomes a lower high, guess what? You're in a downtrend. When price makes lower highs and lower lows, you are now in a downtrend. It's so simple. You see how we just connected higher lows and support and resistance and lower highs together? This is what you have to combine everything. Put this all in your head while you're trading the markets, and success is coming your way. So, do you see this long line right here? This is what you call a trend line. You basically connect the high lows together. So, you need at least 3 touches or 2 touches to have a valid trend line. A trend line is basically a guide in price. It will guide you of the direction of the market. See, now guess what? We used to know the direction of the market. Like we used to know that it was buys and the buyers in the market. But now guess what? The trend is broken. We know the trend is broken because when the higher low is broken, a downtrend is going to form. And in order to confirm that downtrend, you have to have support and resistance zones, right? These are support and resistance zones. And basically, what happened here was the higher low was broken, price made a lower low, and then made its first lower high. And guess what? In a downtrend, you connect the lower highs together. So in the uptrend, write this down, you connect the higher lows together. And in the downtrend, you connect the lower highs together. You need at least 3 or 2 touches to confirm a downtrend or an uptrend. Isn't that simple? It's so simple. So in my next YouTube video, I'm going to teach you guys the way to use the tools on the charts. But you guys need to understand these right here. See these little red and green bars? These are called Japanese candlesticks. Japanese candlesticks are what every successful investor, in the Forex market use to analyze the charts. I'm going to teach you guys the different candlestick variations and how they are used at support and resistance zones. All right. So that's all for the video, and I appreciate you guys watching. And doing FX is out. Whoa, 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 wait. Make sure you follow Cupcakes by Steph. She is very, very transparent. She's nice. She's beautiful at the cupcakes. You know, I love her so much. And if you guys mess with me, please follow her account. Give her a shout out if you want. You know, she's really, really the entrepreneur that will really give you guys good feedback. Thank you so much for watching this video. And I'm out. Doing the effects. Peace.